morning and good afternoon, and welcome to the December 2022 WASDE webinar. My name is Stephanie Carpenter with DTN, your moderator, and with me today is Todd Hultman, lead market analyst for DTN. During this event, all participants will be in a listen-only mode, but you can ask questions at any time during the event. To do this, click the Q&A section located on the bottom right of your screen to open the Q&A panel. From there, type your question in the box at the bottom and click the send button. We encourage you to ask questions at any time during the presentation. Your questions will not be viewable by other attendees and will be addressed during the Q&A at the end of the session. Also, this event is being recorded and a rebroadcast link will be on our DTN website within 48 hours. And as a reminder, our web address is dtn.com. We're ready to begin the webinar, so I will turn it over to Todd.
Thank you, Stephanie. Thank you. Good morning. Happy December, everybody. Thanks for joining us here for a look at USDA's WASDE report for the month of December. Typically, this is a WASDE report that does not get a lot of attention. There's not usually major changes going on. Of course, the harvest period has wound down here in the U.S. There's no new production estimates from NASS today. The next one, which is often called the final production estimate, even when it's not always the final estimate, will come out on January. So mostly today, as far as U.S. balance sheets are concerned, we're looking at the demand estimates for corn, soybeans, and wheat. There'll also be a little interest in what's happening down south, but as you'll see, USDA is not going to make many changes to those South American estimates just yet. It's still quite early in the season. So with that little kickoff, let's dive in here and take a look at what USDA estimated here in the month of December. And as usual, we'll start with corn. Here is the U.S. Balance sheet for corn. The far right column is today's new estimates for the new season, 2022 to 23. This includes the crop that was just harvested, and we have about 1/4 of the year's demand now under our belts. As you'll see in the right-hand column, I just have one little red square down at the bottom, and those four numbers are basically all we need to know about changes for today. As was expected, USDA lowered the corn export estimate from 2.15 billion bushels down to 2.075 billion bushels. That's a 75 million bushel reduction. We've talked for a long time in our daily market comments about the slow pace of export sales, and actually this reduction was widely anticipated last month, so it's finally showing up here in the December report. The new ending stocks estimate is now 1.257 billion bushels, and the average farm price came down a dime from $6.80 now down to $6.70 a bushel, USDA expecting for this new season. So that was the only change of this month in the state of corn. Now we can take a look at the world estimates and see what changes USDA brought there. Here is the world balance sheet for corn given to us from USDA just at 11 o'clock today. We'll start in the upper right-hand corner with the ending stocks estimates for world corn, and we see a reduction from 300.76, and that's million metric tons, down to 298.4 million metric tons. That's a little less than was expected. The trade was actually looking for a slight increase, but there were some surprises here, and the surprises mostly came from Ukraine. So now if we look down at the line for Ukraine near the bottom of the balance sheet, in the production column, the second column from the left, we'll see that USDA cut Ukraine's corn crop estimate from 31.5 to 27 million metric tons. So we've heard about Ukraine having very difficult time harvesting corn. Fuel supplies are low. It looks like maybe a third of that crop is going to stand in fields over the winter as they continue to have a very difficult time getting the help that they need in that country to get the work done. So it continues to be a very tough spot. Now, if we go further to the right on that same line for Ukraine, I should have stretched that rectangle on the right a little farther to include the column on that is third from the left, and that's the estimate of Ukraine's corn demand domestically. And notice that USDA also cut that by 3 million metric tons down to 7.7 million metric tons. Now, Ukraine had before the war a lot of poultry production, and I suspect that a lot of that has been devastated throughout the war. And in fact, we've heard some very horrible stories about poultry operations in southern and eastern Ukraine. So I have to believe that it's war-related things like that that is probably hurting the domestic demand in Ukraine. Now, a little bit surprisingly, even though USDA cut the crop estimate for Ukraine, if we look at the second column from the right, we see that Ukraine's corn export estimate has been increased from 15.5 to 17.5 million metric tons. Now that's still roughly half or so from last year, I believe, but it does show a little success coming from the Ukrainian grain deal and the agreement with Russia to allow ships to leave through the Black Sea. So there has been some success there throughout this whole turmoil. And then lastly, the far column on the right shows Ukraine's ending stocks estimate is coming down from 9.9 to 6.9 million metric tons. So even though they're exporting more, that crop, the big crop is estimated to be even less, and they're going to have less supply available at the end of the season. So that was the main contribution to USDA's lower ending stocks estimate here on Friday. Before we leave this page, I just want to note that in the second column, the South American crop estimates did not change today. Argentina is still at 55 million metric tons on that estimate, even though they are struggling with dry weather and hot temperatures this week. And we've seen some appreciation, mostly in the soybean price and soybean meal prices this week related to that problem. Brazil's crop is in better shape, but USDA also kept that unchanged, 126. Now, of course, the bulk of Brazil's corn crop is grown after the soybean harvest, so we haven't even really got the big crop for Brazil planted yet as far as corn goes. So again, these are very early estimates, and one of the reasons USDA kept those estimates unchanged, as they often do for South America in the month of December. Now let's take a look at the metric that I think is representative, or maybe the best representation of world-ending corn supplies, and that's the one that USDA puts out, which excludes China. That was actually reduced slightly, and in fact, I can point out that number. It's also in the upper right-hand corner. The ending stocks estimate excluding China was reduced from 94.6 million metric tons down to roughly 92.3 million metric tons. So that's a small adjustment lower. And excuse me, I went the wrong way there. And so on this chart, you see that over the past several years, we've seen declining supplies of corn when we exclude China on the world level. Today's estimate works out to 3.63 billion bushels for world-ending corn stocks. That's the second lowest total in 9 years. So this continues to be a fairly supportive view of world corn supplies as far as corn prices go. How about the history of U.S. cash corn prices? Today's ending stocks estimate of 1.26 billion bushels puts us at 9% of ending stocks to use, or 9% of annual use, I could say. And if we look at previous times when USDA was estimating that ending stocks situation of 9% of annual use, we can look up from the red arrow in this chart and see all the blue dots, and those blue dots are cash corn prices over the past 22 years, and where they were at the time USDA was estimating a similar supply level. So as you can see, there's a very wide range. It goes from roughly maybe $3.80 up to almost $8 a bushel. So again, markets are emotional, and they're not always strictly, the prices aren't always strictly related to the supply situation, but it's one of the best gauges we have. The red line running through the blue dots is the statistical center of that price history, and that gives us an expectation for cash corn prices of roughly $5.80 a bushel. Now, keep in mind this is just one way of looking at a valuation for corn. The current national average of corn prices that we have here at DTN was $6.56 last night. So we're still roughly 76 cents above that statistical center. But there's other unusual factors at work this year, and one of them is that, as you well know, we have much higher input costs, so we have a much higher cost of production this year. But that's one valuation metric that I want to just put out there for folks. Corn exports, we've been talking about for at least 2 months now, have been very disappointing in the first quarter of this new season. Total sales are down roughly 48% from a year ago. The latest figure that we got just yesterday gives us the numbers as of December 1. That shows 263 million bushels of corn has shipped so far. That's down 37% from where we were a year ago at this time. Now, the year ago on the chart is represented by the green shade. The black line you see is the 4-year average, and the red line is where we're currently at. So we're both below both of those markers, as you can see here. And of course, the main reason our corn export sales are slow right now is because Brazil had a big crop earlier this summer. They still have corn left to sell, and they're still priced roughly 8% below U.S. prices. So it's still going to take probably another month or maybe 2 before that pricing situation balances out. And then our corn export sales should have a better chance to pick up. The other factor, of course, is we've had low water levels on the Mississippi River. This is the time of year that usually soybeans get first preference, and that's true again this year. But after January, roughly, we should be able to see more movement of corn. Ethanol prices were a concern today. Now, ethanol demand estimate did not change today. USDA kept that unchanged, but moving forward, the ethanol situation is a concern. We've had roughly stable to sideways prices throughout the entire summer, but just here in the last month or so, we've seen a sharp drop in the price of ethanol, and what looked previously bullish when we had rising prices of RIN certificates, which is the brown line, that number has also fallen sharply. So it looks like refiners that need to blend ethanol are getting the ethanol they need, and we seem to have plenty of available supply of ethanol, judging by that steep drop in prices. So this is a bearish bit of concern for demand moving forward. I would still say that the oil energy situation in general is still suffering from tight supplies, and so any weakness in ethanol I still view as a short-term thing to work through here. Corn basis. If you were with us a month ago and we looked at cash corn bids across the Midwest, as I'm trying to show on this map here from DTN, when we looked at the Texas Panhandle, we saw cash corn bids well above $8, and then a lot of $7 plus bids all around the southwestern plains. And of course, they're suffering from the drought situation this year, and their livestock were desperately in need of corn and hay and still need water, of course. That situation has really begun to moderate. There are almost no $8 bids left in that part of the country anymore. They're still high in the sevens. There's a couple $8 bids you can find there, but it's not like it was a month ago. So it looks like the demand situation for corn has eased fairly dramatically in that situation, even though, of course, $7 plus is still an expensive price to pay for corn. The rest of the country, as you can see, when you get to Iowa and Illinois, where they had good crops this year, we're talking in the lower sixes for those prices. And of course, if you're bidding corn near the Mississippi River, counting on the river for transportation, that's where you see some of the lower $6 bids here. But generally speaking, when we do our national average of all 3,100 plus bid sites across the Corn Belt there, the national average came out to $6.56 last night. That's down 18%, or 18 cents from where we were at, 18 cents lower than where we were at a month ago. The cash basis as of last night is 13 cents above the March contract. That is still the strongest national corn basis in 20 years. So it's a bit of a riddle right now when we're seeing slow export demand and concerns about ethanol demand, that we're still seeing incredibly strong basis across the country. And of course, it's hard to argue with basis, knowing that those are the actual bids that commercials are putting out there for your corn. So there still is reason, I think, to expect some support here for corn prices as we move forward. The speculative positions in corn, before we move on to soybeans, we'll just take a quick look here. And as you can see on the March corn price chart, on the upper half, we had a break just a couple weeks ago in the price of corn. We fell not only below the blue line, which is a 100-day average, but we fell below to the lowest close in 3 months for corn. So that kind of long sideways holdout range that we saw all through the harvest period finally gave away. We broke to new lows, and now if you look at the green line on the lower half of the chart, that was the amount of non-commercials or speculative traders in the market holding in the long side of corn, and you can see that they started liquidating, of course, their holdings. Well, those holdings are still pretty substantial. They're holding over 360,000 contracts of corn long. So it's fair to expect perhaps some more liquidation from the trader side of things. So overall trader positions, I would say, are a bit bearish here for corn. I think one of the things helping corn this week has been the firming in the soybean meal price, and that's maybe helped slow some of the selling. But this remains a bit of a concern here, at least on a short-term basis, moving ahead for corn. Now let's take a look at what USDA said today for soybeans. This is the U.S. balance sheet for soybeans, and this will be very easy to explain because they kept all the estimates the same as 1 month ago. So if we look at the ending stocks, it's still 220 million bushels. USDA is still expecting an average farm price of $14 a bushel. And I don't know what else to comment there. Demand, well, other than to say demand has been very good. And actually, the total soybean demand here, 4.4 billion bushels, it's not as high or as strong of an estimate as we've seen the past couple of years. But overall, when we look at demand itself, it's been doing very good. China's remained an active import buyer of U.S. soybeans, and as I've talked about for quite a while now, and we'll get into it again today, the crush incentives remain historically strong for soybeans. So soybean prices continue to enjoy good support from the demand side of the market. Here's the world balance sheet from USDA today. If you notice the upper right corner, the ending stocks estimate just increased slightly. 102.17 million metric tons, now increased to 102.71 million metric tons. There were no changes in the South American crop estimates today. So once again, in spite of drought concerns in Argentina and this week's hot temperatures, USDA chose to wait, and we'll probably get an update in January, is the traditional kind of pattern that USDA goes by on this. And understandably, it's still quite early in the season. Just last night, the Buenos Aires Grain Exchange said that 11% of the Argentina soybean crop has been planted. So even though it's being planted in not good conditions, USDA is going to hold off here, it looks like, on any changes to the soybean estimates. I should also mention that as far as Brazil goes, the early crop conditions for Brazil's crop have been very good. They continue to get plenty of rain as they normally do in the rainy season. There may be a little bit of concern ahead in the forecast for southern Brazil. Could be a bit drier here, but overall it's had a favorable weather outlook to start off its new crop season, and is on track for a record high 152 million metric tons, which is close to 5.6 billion bushels if they come through with good weather. And then the last thing before we leave this page, I always like to look at China's demand estimates, which is the bottom line there. And we can see that USDA's import estimate for soybeans in China was unchanged this month 98 million metric tons. And I believe that's a record high. They continue to expect China with a voracious appetite for soybeans. The history of cash U.S. soybean prices, the current estimate, 220 million bushels, is roughly 5% of annual use. That's a very tight level of ending stocks historically. There's not a lot of room for error in this soybean market, either from the U.S. side or the South American side. The historical target, when we're at this low of a supply level, is roughly $14.20 a bushel. Our cash soybean index last night closed at $14.66, so we're very close to that same fundamental target. Same comment I mentioned for corn, that this year's inputs are much higher than they have been the past couple of years, also rings true for soybeans. So this particular comparison chart isn't necessarily the only thing to keep in mind on valuation, as the new cost of production estimates from USDA are running roughly $12 a bushel as a national average. So that also plays into things. Soybean exports, as you can see from this chart, which is updated as of December 1st from yesterday's report, the pace of soybean exports is doing much better than corn. It's actually a little difficult to see here because the red line, which is the current 778 million bushels of exports, is very close to the black line. They've kind of melded together there, and they're only down 10% from a year ago. So even though we've got those river problems and barge traffic restrictions, they've done a very good job of keeping soybeans moving early here in the season, and that certainly is helpful. And when it comes to the total sales that we have on the books for soybeans right now, they're actually a little bit above a year ago. So I think that was a good call to keep the soybean export estimate unchanged at this time. The soybean basis, like corn, our national soybean basis is at its strongest level in over 20 years. Last night's national soybean index for for soybeans was $14.65 a bushel. That's up 49 cents from where it was a month ago when we last met. The cash basis for last night's index is 21 cents below the January contract. And as I say, that's the strongest basis situation for this time of year that we've seen in over 20 years. So a lot of soybean processors out there making a lot of money this year. That domestic demand is hard, and that having that new strong demand for soybean oil has really helped a lot. Most of the bids that we see across the Midwest here are close to that national average range of $14.65, but there are a couple I found in eastern Nebraska where we have $15 bids still. So overall, though, the bids are spread out quite well. Here's the crush scenario for soybeans this year, and this really explains a lot of why those cash bids and that basis is so strong. The blue line at top is the value, and by the way, I always forget to say these are based on the January futures prices right now, which are the active contracts. So the blue line at the top is what we would get as a value of soybean oil and soybean meal if we crushed 1 bushel of soybeans. And as of last night, that was $18.08 a bushel. The cost of the soybean, $14.86. Take that out of there, and it leaves us with a crush premium of $3.22 a bushel. So every time they crush soybeans, there's at least that much available. In actual cash estimates of crush differ from this, of course, but in general, it shows just how profitable it is this year. If we looked at past years before this year, it would be good to see a crush premium of maybe $2 a bushel would be a very good situation. But this year we've been consistently in the threes, and so it continues to be a very strong demand situation for both products, both meal and oil. We've had a little volatility in both of those products lately, but as you can see from the blue line, the overall crush value is still holding up quite well. The spec positions in soybeans, To me, this is a very bullish scenario. And so what we have here is we have a January soybean price chart that is holding up very well. We had basically a sell-off in July related to economic concerns, and we saw a lot of specs bail out of the market. That green line is the long positions held by non-commercial traders, and we saw them bail out of their positions throughout most of the year, and even now they really haven't come back into those positions. And yet, even without the support of the trader market, we see soybean prices on the rise and doing quite well. So again, this shows strong demand for actual soybeans from the commercial firms that know what to do with soybeans, and just a very sign of a very healthy, strong market in my view. All right, let's move on now. Take a look at what USDA said for wheat today. And again, this is a very simple explanation on the U.S. balance sheet. Wheat's ending stocks were kept the same, 571 million bushels. That's the lowest in 15 years that we've had here in the U.S. The past two crops that we've had for wheat production the past 2 years have been the lowest in 20 years. So we've really taken a hit on our wheat production lately, and it's showing up in the tighter stocks, 571 million bushels. That works out roughly to 31% of annual use, which sounds like plenty of wheat, but is actually among the tighter ending stocks to use ratios for wheat historically. If we take a look at any changes USDA made to the various wheat classes, we see that the bottom line shows the ending stocks estimate for hard red winter wheat stayed unchanged this month, still 259 million bushels. And by the way, I believe that's the lowest. Yeah, that's the lowest in 9 years. The first red arrow shows hard red spring wheat, and there we saw a 5 million bushel reduction in those ending stocks estimates. And I think that's a little bit interesting because of the three wheats that trade on the futures markets, it's the Minneapolis contract where we've shown better support than the other two. So here USDA following up with a 5 million bushel reduction in that ending stocks estimate. The second red arrow is for soft red winter wheat. That's the Chicago variety. We saw a 10 million bushel increase in that estimate before today. That was the second lowest ending stocks estimate in 15 years. So I'll have to check and see if that changed things as far as that goes. But there is 10 million bushels more added to that estimate. And then lastly, there was a 5 million bushel reduction in the white wheat estimates, and that largely has been from export demand. White wheat's always a popular wheat when we can grow it, and this year we had a better year for white wheat. As far as the world ending stocks go for wheat estimates, we see a very slight reduction in the upper right corner. USDA's estimate of ending stocks slipped from 267.8 million metric tons down to 267.3 million metric tons. The more important metric I like to keep my eye on is that estimate excluding China, and that's right below. And that slipped also from 123.5 million metric tons down to 123 million metric tons. So a very tiny change, not really earth-shattering in the world of wheat, but it does continue to give us a view of tight supplies of wheat globally. There were some interesting changes on the crop estimates. As you may know, Argentina is in the process of harvesting wheat, and Australia is getting close here, both the southern producers. And in the case of Argentina, of course, we've heard a lot about drought, and that wheat crop estimate was reduced from 15.5 to 12.5 million metric tons. I'm going to also talk about Canada, which is the third one in the rectangle there. We saw a reduction there from 35 to just under 34 million metric tons of production. That Statistics Canada report coming out earlier, either earlier this week or late last week, where Canada came out with a smaller estimate. And then right in the middle, we see an increase in Australia, and that was earlier this week. Australia's crop agency increased its estimate of Australia's crop to a record high 36.6 million metric tons. USDA followed suit and did the same thing. So following the lead of Australia's crop agency there. So overall, not a big change in the world picture. Oh, one more thing I wanted to note before we leave. We've also wondered about Russia's crop estimate. A lot of estimates are much higher than USDA's 91 million metric tons. But of course, there's confusion this year as to what wheat belongs to Russia and what wheat belongs to Ukraine. And of course, it depends on who you talk to, where they're going to draw the boundary line. USDA has kept with a 91 million metric ton crop estimate for Russia, but I'm sorry I didn't mark it, but if we look at Russia's export estimate, it actually increased 1 million metric tons from 42 to 43. So we've seen more activity the past month and a half, more export activity from Russia. They seem more active now, and of course the fact that they extended the agreement to allow Ukraine grain to flow through the Black Sea also helped Russia's position to export wheat, and we're starting to see the fruit of that in this report here. But overall, not a big change in the ending supply situation for wheat. I talked about world-ending wheat stocks excluding China. This is the graphic for that. Today's new estimate comes out to 123 million metric tons, or 4.5 billion bushels. That's the lowest ending stocks for global supplies of wheat we've seen in 15 years. So again, seems like a very strong argument for wheat prices finding some support here, even though they've really had a tough couple of months as far as finding anything to hold them up. The history of cash, hard red winter wheat prices. The tough thing about this chart is it has even less correlation. There's even less correlation of USDA's supply estimates of HRW wheat to actual cash prices than what we saw in corn and soybeans, and those correlations are quite loose. Well, just to put it out here as a possible valuation, with the 31% ending stocks to use ratio that all wheat is currently showing here in the U.S., it suggests a Kansas City wheat price of $6.30. That is a hard red winter cash price, $6.30 a bushel. We're currently trading well above that, $8.12, and there's, I think, several reasons. And one of the course has been the war in Ukraine has added a lot of concern to markets, even though we've seen a lot of that premium shrink here through the summer. But we also, as I mentioned, we have a very tight world situation in addition to a very tight U.S. situation. So we still continue to see cash HRW wheat prices trade well above this kind of fundamental comparison of historical wheat prices. The basis situation in wheat is really nothing to brag about at this time. The green line is where the basis is in the current season, and that's currently 32 cents below the March price based on our DTN National Wheat Index, which closed at $8.13 last night. Now that's down 93 cents from a month ago, so wheat prices have really taken a hit lately, but the basis still is very close to the average of where it's been the past 5 years. So we don't really see any strong clues as far as HRW wheat demand in this particular chart. The spec positions in wheat is somewhat interesting. Now, in late 2021, there was a lot of speculative buying in the long side of Kansas City wheat, and a lot of it was due to the fact that we had a very strong drought in spring wheat country last year and came in with a much smaller crop than was expected earlier this year. That large speculative position has largely sold off throughout the entire war in Ukraine situation here in 2022. And the current holdings of spec traders in Kansas City wheat is now near its lowest levels in 9 years. So they've really largely abandoned this market. I think part of them is they're just not excited about being in a market that has such volatility and uncertainty, and who knows what Russia's going to do next. And so for that part, it's somewhat understandable. But as you can see here, wheat prices are largely trying to find some kind of a base here. It looks like between $8 and $10, and I have to suspect maybe we're getting close to support here. The other thing I wanted to mention, I don't show Chicago wheat on here, but in the case of Chicago wheat, the futures funds are net short over 53,000 contracts in Chicago wheat, and in my mind, that's an extremely dangerous position for speculative traders that have no business ties or connections to the physical wheat product. There's no hedging involved there. They're just financially naked short in this market, and of course, it's still a very dangerous market. Missiles continue to fly nightly, and who knows what's going to happen next. So that's one very possible dangerous position that still could result in short covering. Who knows any time this winter? Just throw that out there. Lastly, after all that, we did not see a lot of changes, especially in the U.S. balance sheet today. I would say the corn adjustment maybe is slightly bearish. Ukraine's adjustment shows less corn on the way, but overall we do have a slow demand concern about U.S. corn here in the States. Overall, the numbers were really quite neutral for soybeans and quite neutral for wheat, even though in the larger picture these are the lowest ending soybean stocks in 7 years and the lowest U.S. and global ending wheat stocks in 15 years. So not much excitement from today's report in that regard. Let me take a quick look here just to, oh, maybe I don't have the prices available right now. Oh, no, here we go. Sorry. As we speak, March corn is up 0.75%. January soybeans are down 4.5%. March Kansas City wheat down 13 3/4. So the Kansas City wheat sell-off largely related, I believe, to a lot of precipitation in the forecast for next week. But I don't think we're seeing much change from today's numbers or today's reports in that regard. Before I let you go or take on your questions here in just a second, I just want to point out that on Monday and Tuesday we are having our Ag Summit here at DTN. That is where we bring in a wide range of speakers and talk about all kinds of different topics related to ag. This year we have speakers talking about the supply chain problems, carbon topics, what's new in the field of carbon capture, and what are some of the opportunities there. We have the possibility of a farm bill coming up, and I understand we have some familiar congressmen that you know that will be talking about their view of what's ahead for the farm bill. We have Senator Pat Roberts from Kansas and Colin Peterson from Minnesota. As I say, familiar names, and so lots of good things to talk about. And of course, we'll have updated weather and market outlooks from John Brannick, Shaley, Stewart, and myself. There is still time. You can register. They're hoping to get registrations in by today, but I understand if you absolutely need to, you can register this weekend, and you register at dtn.com/ag-summit. So with that, I'll hand it back to Stephanie and see if we have any questions today.
Thanks, Todd. We have one question, and it is, what is the forecast for rain in the Mississippi River Basin?
Oh, yes, that's quite promising. Of course, not if you're traveling there, but early next week, we're going to have a broad coverage of very heavy precipitation across both the central and southern plains. A lot of, not only will the lower Mississippi River, not only will that area be targeted for some heavy rains, but a lot of the areas that feed into the Mississippi River, for instance, the Ohio River and so forth, those rivers ought to also get lots of moisture next week. So that's going to be favorable for bringing up those water levels on the Mississippi River. If for folks interested in winter wheat, there's also going to be some good chances of getting some moderate to heavy precipitation in the winter wheat areas. Pretty much all but the western edge of the southwestern plains, it looks like it's in store for some kind of precipitation, and depending where on your map, it'll fall either as rain or snow, but there will be some kind of soil moisture benefit there here in mid-December.
Thank you for that, and that is all the questions for today.
All right. Well, thanks, everybody.
Thank you. And I'd like to thank everyone for joining the webinar today. As a reminder, today's event has been recorded and the rebroadcast link will be up on dtn.com within 48 hours. Also, if you have additional questions or would like more information regarding our topic, Todd's contact information is listed here on the screen. This concludes our event. Thanks for joining and have a great rest of the day.